Welcome back to the Crypto News channel. For those of you who haven't got an account yet to buy, sell, and trade Bitcoin, you can open an account on the Binance exchange using the link provided in the description to receive a 10% lifetime trading fee discount. Today's information: Bitcoin quickly recovered slightly to $66,000 after dropping below $65,000 yesterday, triggering a strong sell-off in the market. The entire cryptocurrency market followed a similar trend, experiencing a significant 5.7% drop to $2.5 trillion, wiping out over $122 billion from the market. Apart from stablecoins, digital assets in the top 30 by market capitalization all recorded significant losses, with Ethereum dropping 8%. Digital asset funds returned to victory last week, led by strong investments and Bitcoin ETFs in the United States, with approximately $862 million in inflows recorded across organizational crypto products. This marks a strong recovery compared to the outflow of $942 million seen the previous week. The latest inflows have brought the total inflows since the beginning of the year to an impressive $12.8 billion. This increase may be due to strong demand for US-based Bitcoin ETFs, attracting $860 million in inflows last week. Strong inflows into new ETF funds led by BlackRock's IBIT in the past week have helped offset outflows from Grayscale's GBTC. On the other hand, Ethereum-linked funds witnessed outflows of $19 million last week. Price sentiment may have originated from the lower Ethereum ETF approval opportunity, while Solana investment products saw $6 million in inflows last week, driven by impressive price performance. Bitcoin ETF demand could create a super cycle of investor behavior. Today's Bitcoin investors may be familiar with long-time observers, but not everyone agrees with the level of demand seen in history. Bitcoin ETFs have helped propel Bitcoin to unprecedented highs this year. However, analysts have different views on how these investment vehicles could determine where Bitcoin will go next. Bitcoin ETFs are trading products similar to stocks on traditional exchanges, allowing investors to access Bitcoin without directly buying and storing the asset. The launch of Bitcoin ETFs in the US, rejected by the SEC for over a decade, has led to tens of billions of dollars pouring into the market since January. According to Glassnode's JamCheck analyst, they are not the crucial factor changing Bitcoin's price trajectory, as many think. Analysts have examined key figures related to Bitcoin's cyclical price fluctuations, comparing them with today's asset prices. They also consider other historical catalysts for Bitcoin demand. On-chain data shows a fairly equivalent amount to what is being driven by ETFs. These ETFs are not too new. In 2019, the Plus token program in China absorbed about 2% of Bitcoin's supply in about 3 or 4 months. Before that, GBTC absorbed 650,000 Bitcoins after 4 months. To compare, 9 newly launched Bitcoin ETFs have absorbed about 508,000 Bitcoins since they started operating in January. Including GBTC, all 10 Bitcoin ETFs hold over 800,000 Bitcoins. Breaking the belief that the cryptocurrency market is in a super cycle, analysts emphasize the behavior of on-chain investors today remains similar to when Bitcoin prices surged around market milestones in the past. Realized gains and losses by investors have increased in both 2019 and 2021, a sign that long-term holders are making money from coins bought cheaply and their inactivity. A similar phenomenon has been seen for many months, this time in the form of a large outflow from GBTC, where investors have held Bitcoin for many years. However, comparisons with previous cycles depend on the measuring tool used. Although the profit-taking pattern of long-term investors seems familiar, the absolute accumulation power of Bitcoin's hardest holders is undeniable. Julio Moreno, CryptoQuant's research director, said, "We have witnessed unprecedented Bitcoin demand growth this year." He explained that annual growth in Bitcoin data by large investors is also hitting record highs, signaling strong investor demand. Furthermore, permanent Bitcoin holders, i.e., addresses that have bought but never sold their Bitcoin, have absorbed about 200,000 Bitcoins per month since ETFs went live, compared to just about 40,000 Bitcoins before launch. All of this indicates that Bitcoin demand has never been seen to be much greater than in previous periods. Glassnode analysts previously described the current Bitcoin price increase as one of the strongest markets in history and predicted that the Bitcoin stream could reach $250,000 by the end of 2025. That's the content of today's video. Hope you enjoyed the information I provided. Don't forget to like and subscribe to support me in making future videos. Thank you for watching my video. Goodbye and see you again.